Thursday, March 28th, the last day of this week, last trading day of this month. So hopefully everyone is coming into the end of the month and has had a good one. If not, well, you get to start again on Monday. So hopefully next month is better. As we can see here on the monthly, we got that rally later in the day, finishing with a close of 53.08 quarter. Like we had talked about yesterday, there was really no danger until the market got below this 52.46. It was just unable to do that, still kind of maintaining this trend. This line here is on a daily chart, kind of skews it when it's on the monthly. But for the most part, we're just still one time framing higher. And we're going to be closing near the high of the month. So it's an interesting look as we come into the next month, right? If we get below this +4, maybe some opportunity for some short covering, we'll have to kind of pay attention. But for now, the monthly still remains looking strong into the close, which will be today. Only news today that's left. We have Chicago PMI 945, 10 o'clock. We have pending home sales, 10 o'clock. We also have the revised consumer sentiment, revised inflation expectations, and then natural gas storage 1030. So not really anything that I think is going to move us down, close to 200 points to get back inside the previous month's range, but who knows? We're looking at with the market trading at 5,300, a 200 point ish range down would be almost 4%. It's probably the odds are just not real high. Switching over here to the weekly, you can see that this week still remains inside the previous week's range. We have the market just continues to kind of respect this trend and move higher. We're still one time framing higher, but we're having an inside week. So the key today would be to monitor that close from last week, which was our +4 close, that 52.93 quarter, right? The level that we've been monitoring. That'll be a key level. If the market's able to get above that, there's probably, or to stay above that, probably strong for the market. If it does slip below, probably a little bit of liquidation that might take the market a little bit lower. So just have to be aware of that level, definitely. And then up towards the high, we've got the all-time high, 53.2275. So we just want to be kind of paying attention for that. We did have, and we switched to the daily here, we did have the highest close of the year yesterday. So I know we didn't have the highest high, right? Because the all-time high is 53.2275. But on a closing basis, yesterday we closed 53.08 quarter. That day we made the all-time high, our close was 5,300 or 53.0250. So the highest close of all time in the history of the S&P. So we definitely want to be kind of paying attention to that. I would lock this in to a 5-day balance, 1, 2, 3, 4, 5, with yesterday being a +4 day. And so we're kind of in this 5-day balance after this move up out of this larger balance that we talked about, or out of this other balance that we talked about. So we keep moving higher and balancing. So, I mean, you come back all the way down here. There was that really large balance, moved up, balanced, moved up, balanced, moved up, balanced, moved up, balanced. And now we're kind of balancing again here. So you can kind of see the path the market is taking, right? Just moving up a little bit, taking a break, moving up a little bit, taking a break. It makes it a little bit easier to continue to move higher, as every time there is a down bar, pretty much everyone and their mother says that the market's going to crash, and they've been wrong for the most part. When I say for the most part, I'm just being nice, because they've been wrong the whole time, right? So definitely something we want to continue to pay attention to. But as we can see, really for the most part, the market has been moving higher. Now switching over here to the profiles, we can do a little review from yesterday. yesterday the market caught a liquidation right off the bat, opened up right on that +4 weekly. They just liquidated right off of it, gave us that B shape, built some value at the low, gave us some signals, poor low in that 45-degree angle, which we were, in the room figured out very early. So good job with that. I think it was Roach that called it that 45-degree angle. We moved up, we bounced a little bit more, we moved up, and then the M period came up and blasted off. So if you look where it blasted off of, right off of the caught VPOC, and this is something that we talked about earlier this week, that this level is just so important because a lot of moves have started from there, including the last COTS move as well. So definitely something I think that we want to just kind of continue to pay attention to. If I detach this chart real quick, we can look at the COT and you can see as the COT starts to develop, so there'll be 2 more days here, but we have this is a completed COT. This is the report we should get. If we don't get it today, we might miss a week because of the news. I'm not sure if it's going to come out today or not. We'll have to wait and see. But we can see this move really, they tried to build some value below it, and then the move just takes off. And we can see when that happens previous times, you get this move from this COT that moved up right off of the previous COT's point of control. So I think definitely something we want to be paying attention to, as it's basically letting us know that there was obviously some buying going on in here. And for the most part yesterday, actually pretty decent volume, as far as the end of the day goes comparatively, right? We haven't had a million volume since the 20th, and that was that last day with that big move up. So a big move up on increased volume is normally a sign of bullishness, but we don't want to get too crazy and start trying to make any predictions. With yesterday being a +4 day, we definitely want to be aware of that, and that's going to be that settle. So what I'm kind of thinking here is if we can hold this settle off the bat, then there's pretty much nothing holding us back. We should be able to kind of continue moving to the upside here. Maybe a little bit of distress here around like the 53.19, 53.20 level. Inside this or below this +4, I think you're probably just going to get chopped in this entire range, like all the way down to 93, is probably just going to be a chop zone. And then below that is where you actually probably start to unleash the beast a little bit, below this weekly +4, below last week's close, right? We start to get some downside, and I think that's when the move comes back to the COT. If we get back down to the COT, then we'll kind of make some decisions. It's kind of hard to decide what's going to happen until the time comes. Of course, you got to make those decisions on the fly. You can only plan for success. You can't really, know what's going to happen. Nobody can. But that's pretty much it. Short and sweet today. There's not really much going on. It's Thursday. Like I said, it's the last day of the month. So, for those of you guys that had a good month, don't try to ruin it today. And if you haven't had a good month, remember next month starts on Monday. So, go ahead and just get ready for that. I'm trying to think of the quote that I saw that somebody had. It said something about planning for success. I can't remember it. But it's like, if you fail to plan, you plan for failure, or something like that, right? And so that's such an important quote. I'm trying to remember who told it to me. But basically, like I say every day, make sure that you're managing risk and sticking to your trade plan. It really is indicative of you to have a trade plan. If you're coming into this kind of blind and setting up your levels on the go, you could say that that's a plan, but that's not really a plan. You always want to have a pre-plan before the market opens or before you actually get ready to take any trades. If you're one of those people that sits down at the computer and then just gets in a trade right away, you're probably not profitable. and it can just be a recipe for disaster. So just always make sure you have a plan. And if you don't have a plan, that's no big problem, right? Just don't trade. Just watch the market. Nothing wrong with getting a little bit of experience under your belt. Remember, trading's here. It's not really going anywhere. So the more money you waste trying to learn, the less likely you are to last. And like I always say, I think the biggest reason that only 90, and I'm using air quotations, 90% of traders don't make it is not because they can't make it. It's because they run out of money trying to get to the promised land. And that's just, a combination of a million things, psychology being the biggest, and then over leveraging probably being the second largest. But other than that, you guys have a wonderful day, wonderful weekend. Enjoy Easter. Make sure you're managing risk and sticking to your trade plan. And I will see you guys on Monday.